Apple Incorporated is a company that needs no introduction. According to a CNN poll in 2012, 51% of households in the U.S. own at least one Apple product. But how well do you really know this company? Apple ignited the personal computer revolution in the 1970s. Let's take a look at how it all got started. Apple was founded by Steve Jobs, Steve Wozniak, and Ronald Wayne in 1976. The company's first headquarters was the garage in Jobs' parents' house. The Apple I was their first product. Introduced at the West Coast Computer Fair on April 16, 1977, the Apple II was one of the first successful personal computers. By the end of production in 1993, it is estimated that somewhere between 5 and 6 million units had been produced and sold. By 1979, Apple had more than 250 employees and moved its operations to Cupertino, California. In 1980, the Apple III personal computer hit the street, and so did the company, going public on the NASDAQ stock exchange. Apple introduced the Lisa in 1983, which despite early successes proved to be a failure due to its high price tag of nearly $10,000. In 1985, a power struggle developed between Steve Jobs and CEO John Sculley. Jobs attempted to oust Sculley from his leadership role, and when the board got wind of this, they stripped Jobs of all managerial duties. Jobs subsequently resigned from Apple. In the late 1980s, Microsoft, Apple's largest rival, enjoyed great success and began to overtake Apple as PCs saturated the market. The power struggle between these two companies continues to this day. When Jobs left Apple in 1985, he started another computer and software company called Next. In 1996, Apple CEO Gil Amelio decided to purchase Next. Jobs returned to Apple in an advisory. After a series of devastating quarterly losses, Amelio was pushed out as CEO by the board. Apple asked Jobs to be interim CEO in 1997, and 1 year later the title became permanent. In 2001, Apple pioneered the portable music industry by introducing the iPod, a portable music player which could hold an unprecedented amount of digital music. In 2007, Apple was at it again. This time they revolutionized the landscape of the cell phone industry by releasing the iPhone, which proved to be the world's first smartphone. In 2010, Apple furthered its innovative successes in the consumer electronics market with the release of the iPad. After battling serious health issues for nearly a decade, Jobs was forced to permanently resign in August 2011. Steve Jobs passed away 6 weeks later at the age of 56. Longtime Apple executive Tim Cook was named CEO of Apple.
Now, let's take a look at the past performance of Apple's stock. Apple's stock price has been on one wild ride over the last 36 months. However, don't lose hope by only focusing on the downward price trend at the back end of this chart. Apple is the epitome of a stable stock. Let's examine the accelerated growth trend that began in the last quarter of 2011. That trend, which saw the stock price go from $400 to $700 in approximately 11 months, was due to the anticipation and rumors generated by the expected release of the iPhone 5, the company's most anticipated and hyped product. It's possible that Jobs, realizing this, intentionally delayed the launch of the new phone until Cook was acting CEO, all but guaranteeing that Cook's first product launch as the new head of the company would be successful. The stock price began its return to reality shortly after the launch. It's not that the new phone was a disappointment, but that the long-awaited anticipation was now gone. In addition, the public didn't know what product was coming next or when it might arrive. Here you see the performance of Apple stock over the past 2 months. The stock price has been locked in the $400 to $450 range since its mammoth drop, which began in September of 2012. The stock dipped to a 2-month low on June 28th, but then immediately began a gradual climb to a 2-month high by August 5th. This upward trend was supported by a favorable earnings report released on July 23rd, as well as 3 acquisitions that Apple made between July 19th and August 1st. With the iPhone 5S due to release this fall, this stock's reaction will be worth watching. When you get down to it, Apple must release a new product that enamors the market for its stock price to perform well. This is the case for 2 reasons. Number 1, Apple and Tim Cook need to prove that they can still churn out innovative products post Steve Jobs. And 2, because this is how Apple makes its money. This stock seems to be stable at this point and worth watching in the near future. Now, let's take a look at the financial strength of Apple. Return on assets is a valuable metric which indicates a company's rate of return on its assets. It is important to look at this financial ratio over a long-term view because this ratio can vary greatly should a company's earnings or assets fluctuate. Apple has repeatedly proven to be a strong and stable performer, whereas its competitors in the hardware industry like IBM and Dell, while consistent, have had a hard time reaching even 75% of Apple's asset efficiency. Apple is a lean and focused company, and this stock is a great investment opportunity for you and your money. Revenue and earnings are the metrics the average investor likes to focus on while researching stock. If you want to just be an average investor, you should limit yourself to only those benchmarks. However, if you'd like to be a better investor, you need to dig deeper and look at key metrics such as inventory turnover ratio, ITR. ITR is just what it sounds like. How many times a company sells its entire inventory over any given period, usually a year. Why is this ratio important? Well, for a cutting-edge technology company like Apple, it's very important to quickly move items off your shelf before products become obsolete. Looking over the past few years, we see another area where Apple is dominating its competitors. IBM and Dell have ITRs that have remained practically unchanged from 2010 to 2012. Conversely, Apple has consistently improved its ITR during that same time period. These numbers indicate that Apple is improving its operational efficiency and how it manages its inventory. This is yet another reassurance that Apple stock is currently a great place to invest your money. A good pattern for successful businesses to emulate is that their assets be greater than their liabilities. An accurate measure of this principle is the asset test ratio, ATR. The ATR provides a realistic picture of a company's ability to fulfill its current liabilities. An ATR equal to or above 1 is desirable. Looking at Apple's ATR numbers over the previous few years, we can see another metric in which they have performed well. While IBM and Dell have had respectable ATR numbers, Apple once again displays dominance among its competitors. A trend worth noticing, though, is Apple's decline in ATR from 2010 to 2012. This trend is likely due to an increase in current liabilities. Apple's asset test ratio is still at a respectable level, and a further decline should only prevent investment if their ATR drops below a threshold of 1. Once again, your money and Apple can do great things together.
So, you may own their products and you might invest in their stock, but would you want to work at Apple? Apple is constantly in the top 5 or 10 of the most admired companies by Forbes magazine. In 2013, they once again continued their 6-year streak at the top of that list. As you can see, there are a number of different types of positions at Apple, from sales to marketing to legal to engineering and everything in between. The employees are paid industry competitive salaries at each type of position. At many of the employment rating websites, it's typical to see Apple employees among the most satisfied with their jobs. One survey found that CEO Tim Cook had a 93% approval rating among Apple's workers. The most common complaint among employees at Apple is that advancement is too slow. But that's a strong indicator of a company with happy employees who want to stay. Now, let's examine Apple's global business. As you can see in the outer ring of this figure, Apple had secured a 5% stake in the global smartphone market by 2011. Apple is continuing to make strides in establishing their presence in the consumer electronics global market. China and India are the 2 most important suitors in that category. In December 2011, Apple successfully launched the iPhone 5 in China. Keep an eye on Apple's global efforts, as they will certainly contribute to whether or not Apple can continue its dominance. A 2013 study by the Web Analytics Committee, StatCounter, found that more than a quarter of all global internet traffic on mobile devices went through Apple products. It is the first time that Apple led all other mobile vendors in this category. This is a good sign that Apple's push in the global market is effective. A Google Trends study also showed that between January and May of 2013, the Apple iPhone 5 was the most searched smartphone. Another good indication that Apple's global marketing is continuing to pay dividends in the form of brand recognition. Apple is one of the most transcendent corporations in history. They wrote the book on innovation and brand identity. Apple has proven that it knows how to manage its money. They've shown resilience in their ability to weather economic and corporate storms. Apple stock is stable for the long term. Their financial position is enviable, and they continue to think outside the box. There must come a point in every company's trajectory where they reach their peak and the descent begins. Apple doesn't appear to be there yet. Their employees are happy. Their customers are fiercely loyal. The data presented here only leads to one natural conclusion. Apple is a wise place to invest your money and a great place to work.